Hello dosto, a very warm welcome to this session. I hope your preparation for the RBI Grade B 2026 exam is going on really well. The need of the hour is to balance between the preparation of phase 1 and phase 2, and while doing this, I know there's a whole lot that you are juggling through. In that, the preparation for the important papers like FM paper, as far as your phase 2 exam is concerned, that is slightly sometimes neglected. So, keeping that in mind, we have come up with this wonderful series, that is PYQ to concept series, wherein we'll be discussing the most important topics of finance, and there's a separate series for management. So, here all of the topics which have actually been asked in the previous questions are being discussed, so the entire preparation is streamlined in a PYQ based manner. Okay, and also there is a high chance that these topics can be asked in the upcoming exam, right? So keeping all of these things in mind, this series is going to make your preparation, make your foundation with respect to the preparation of the FM paper for the phase 2 very strong. Okay, and then you can build on it after phase 1. That is what is our aim with this particular series of lectures. So here, this is the part 3 of our discussion, right, for finance. And before moving ahead into this particular session, let me just tell you that our EduTap has come up with a wonderful guidebook for you so that you can prepare really well for the exam, which consists of the previous year questions right from 2019, which are solved and answered properly, the decoded syllabus, and most important topics that you must not miss out while preparing for different subjects of this exam. Also, how to prepare each and every paper, what should be the sources, and what should be the strategy that you should be taking help of as far as your preparation for the RBI Grade B 2026 exam is concerned. So this guidebook is provided to you in the PDF format, totally free. This is a unique guidebook which has unique features you might not find anywhere else. So do not wait. Please download it quickly by clicking the link given in the description of this video in the PDF format. Okay, now moving ahead, let me tell you that this series is focused on discussing all the most important topics of finance. If we see the syllabus of the FM paper, specifically the finance part, we have structure and functions of the financial institutions, functions of Reserve Bank of India, banking system, recent developments in global financial system, role of information technology in banking and finance, non-banking system, developments in digital payments, then financial markets wherein primary and secondary markets, forex, money, bond market, equity market, their functions, instruments, recent developments, okay, related to these. I think in the previous sessions we have discussed. So also the general topics like financial risk management, basics of derivatives, global financial markets, financial inclusion, alternative sources of finance, corporate governance in banking sector, union budget, basics of accounting and financial statements, and inflation finally. Okay, so all of these are part of your syllabus, right? I'm showing you this from your notification, and let me tell you that we are covering most of the topics that are there in the syllabus, okay, which are very very important. All of those topics are being covered as part of this series of 5 videos. Okay, so part 1 and part 2 is something that you have already seen, right? So there we have discussed time value of money, bonds, derivative, equity market, debt, forex market, alternative sources of finance, banking system, RBI and its functions properly. Okay, so this is part 3, and here we'll be discussing financial institution, financial inclusion, development in digital payment systems, role of information technology in banking and financial system. Okay, so all of these things are something that we are going to discuss here, and ahead we have more topics, right? So this is part 3, and let me tell you, 2 p.m. Almost on all the weekdays we have these sessions coming in. Alternatively, finance and management 15th May, so next day you will be having the video of management coming in 18th and 19th management video, in 21st will be the last video of management that you will be seeing, right? So by the time it's 21st of May, all of your important topics of FM paper are definitely covered based upon the previous year questions. Okay, so on that note, let us quickly begin this session. The first chapter that we are going to discuss today is financial institutions. So let us have a look at the first question. Udyami Mitra portal launched by SIDBI is for dash. Okay, so Udyami Mitra portal is a very important one. In many of the exams it is asked question more. So for the RBI Grade B Phase to 2018, it is this was a question that was asked, and in the upcoming exam also it might be asked. So Udyami Mitra portal is for whom? So if I tell you about this, the name itself says Udyami in the sense MSME. So if you see SIDBI, Small Industries Development Bank of India, so this is an all India financial institution. I hope you have an idea on those all India financial institutions. There are five such institutions in India which actually focus on various activities of various spheres. They mainly focus on financing, refinancing, and supervision. While we have regulators over them, all these all India financial institutions are regulated by the Reserve Bank of India. Okay, so these entities have their functions in specific areas. Like if we talk about NABARD, you tell me NABARD is actually functioning in which particular area. Then we have SIDBI, Small Industries Development Bank of India. Then we have Exim Bank, right? Then NHB, National Housing Bank. Then finally we have NAPFID, right? So these are the five All India financial institutions. Out of them, we are talking about SIDBI. So NABARD is in the agriculture and rural development sector, isn't it? Small industries, which is MSME sector, we have SIDBI, and Exim Bank is in the export import sector, and NHB is in the housing sector, while NAPFID is in the infrastructure development and financing the infrastructure in that sector. So talking about SIDBI, it has come up with various initiatives so as to help the MSMEs, and one such initiative is the Udyami Mitra portal. So it is this portal is the Mitra of the MSMEs. How it connects MSMEs who need loans with all the institutions, entities that can provide loans. It is like a we can say peer-to-peer lending sort of a we can say website, right? So in on this portal, all the MSMEs can come and try to take loans, right? And we have banks and other financial institutions which are capable of giving loans, both parties connected by this particular portal, which is an initiative of the Small Industries Development Bank of India, SIDBI. Okay, so obviously what will be the correct answer for this question? Yes, you have guessed it right. If you have said B, small and medium enterprises, B is the right answer, not large scale industries, rural industry, automotive industry, not these. Okay, so that is the thing. Now moving ahead, if we talk about the All India financial institutions, we definitely have seen the introduction. So talking about these institutions, they are mainly involved in financing and supporting the development in the key sectors. As we have already seen, they are established as per the section 272 of the Companies Act. It defines this all India financial institutions, and they are notified by the central government specifically as per section 4A of the Banking Regulation Act 1949. Okay, so how is it defined? All India financial institution means financial institution specified in the fourth schedule. Okay, and includes any such institution that is notified as per this particular act. Okay, so I hope that is very clear. Now moving ahead, their entire regulation and supervision is done by the Reserve Bank of India as per section 45L of the RBI Act of 1934. Okay, so that's the mandate. Now talking about SIDBI, it is a wonderful organization established in 1990 supporting the small industries, which means the MSME sector basically. Okay, their promotion, financing, development is something which is a mandate of SIDBI. It has been established as per the SIDBI Act of 1989. Now its headquarters are in Lucknow, Uttar Pradesh, while the shareholding structure of SIDBI is really wonderful. You can see, of course, Government of India holds the major shareholding as far as SIDBI is concerned. It holds 27.57% of the shares or shareholding of SIDBI directly and indirectly through the State Bank of India, LIC, and NABARD. SBI holds 14.32%, 12.20 is held by LIC, while NABARD is the fourth largest shareholder, holding 8.56% of the shares, while the others 37% shares are held by other entities. Is that clear? So basically, major shares are held by the Government of India, more than 50%. So SIDBI is actually a Government of India owned, we can say owned and managed institution, right? So the first chairman of SIDBI was Mohammad Mustafa, while the present chairman is Manoj Mittal. Okay, so you can remember that. If we talk about the Udyami Mitra portal, this portal, you can see I have shown a screenshot of the portal here. It is established by SIDBI, Small Industry Development Bank of India, and people, all the entities, MSMEs can get different types of loans like Mudra loans, Stand Up India loans, other MSME loans, knowledge portal, capital, right? So all of this is there, not just providing loans but also helping with establishing the establishing MSMEs is something that this portal does. Okay, it is also part of the Stand Up India Mudra and initiatives, and also Indian Banks Association is involved in its establishment. Clear? Now moving ahead, if we talk about this question, which of the following statement is or are true? Okay, SEBI is the regulator of commodity markets, RBI is the regulator of NBFC, SEBI is the regulator of capital market. Okay, so which of these statement is absolutely true? So you should be knowing about the regulators also. These regulators are actually those entities which are sort of guardian of specific sectors. Like if you talk about the banking sector, if I ask you who is the guardian of the banking sector, you will say RBI, isn't it? Similarly, we have the capital markets sector. Who is the guardian of that? SEBI. Okay, insurance sector, if I ask you, you will say IRDAI. And if I ask you about the pension sector, what will you say? You will say PFRDA, isn't it? So these are some of the guardians. Why are they called guardians? Because they set the rules and regulations and they see that the rules and regulations are complied with. They are responsible for the so that whoever is the customer, whoever are the people who are actually becoming participants in these specific markets, they do not have any of their interests withheld. Okay, so they're not cheated basically. This is the main thing. Okay, whatever is promised, whatever the rules and regulations, those are being followed. So in that case, here the question is, SEBI is the regulator of commodity market, RBI is the regulator of NBFCs, and SEBI is the regulator of capital market. Okay, so which of these statements are actually true? Yes, please try to tell me based upon the knowledge that we have obtained over here. Yes, if you have said C, it is absolutely right. Commodity markets again can be part of the capital market, and capital market directly I have said, so SEBI is the regulator of them. Now, of course, RBI is the regulator of banks. RBI is also the regulator of non-banking financial companies. Okay, not completely, not all types, but yeah, most of the NBFCs fall under the regulation of Reserve Bank of India. Okay, so that is why we can say all of these statements are actually true. So C is the right answer. 1, 2, and 3 is the right answer. 2021 RBI Grade B Phase 2 exam question. So talking about the regulatory bodies and specifically about SEBI, we can say it protects the investors, right? Interest of the investors, also is engaged in the development of the securities market and also regulates the security market. If anything goes wrong, it is also liable, and so it can itself punish those entities because of whom things are going wrong. The headquarters are in Mumbai. Present, if we say the chairperson is Tuhin Kanta Pandey, while the first chairperson was S.A. Dr. S.A. Dave. Here it was established in 1988 as a non-statutory body, and at that time it was not established as per a specific act. Act is something which is also called statute. So if any organization is established as per a specific act, like RBI was established as per the RBI Act of 1934, and in 1935 we had RBI established, isn't it? So RBI was established as a statutory body because its basis, the background of RBI was established before RBI came into being as part of the RBI Act of 1934. So it is a statutory body. So if you talk about SEBI, it is non-statutory. No such act was brought, but SEBI was established before any such act came. But later on, SEBI Act of 1992 was brought into existence, and SEBI gained statutory powers. Okay, it replaced an organization, or you can say an office, called the Controller of Capital Issues, established as per the Controller Issues Capital Issues Control Act of 1947. It regulates the securities or capital market of India. I hope that is very clear. Now, what is capital market, and differentiating it with something called the money market? Okay, so if we say that, and also we saw in the question there was commodities market. Okay, so if we see commodities in the sense, if you are trading with respect to certain commodities like gold, silver, platinum, these are some metals, while also other commodities like we can also trade with respect to some potatoes, onion. Okay, so there are derivatives which are which can have these things as their basis. So all of this market, and capital market actually means all of those loans, we can say, or loan instruments wherein loan is given and taken for a period greater than 1 year. Okay, so that is called capital market. 2 years, 3 years, 10 years, like that. Money market is wherein loans or money transactions happen for a period less than or equal to 1 year. 3 months, 6 months, 9 months, that is something which is money market. I hope the difference is clear, right? So this is a thing. Now moving ahead, if we talk about the role of SEBI, it is involved in protection, regulation and development of the capital market sector. Now talking about RBI, it is a central bank. It's also called the Reserve Bank and the monetary authority. Okay, why the central bank? Because that is the bank which is the center of all the banking institutions in India, more so other entities also like NBFCs and others. Okay, it's also the monetary authority. It has a mandate as per the RBI Act. Okay, what is that? 1934, it has a mandate of price stability. Okay, stating it exactly, if I tell you, it has a mandate of price stability. That is, it has a mandate that the inflation in our country should not be going beyond a certain level. Okay, you will tell me what is that. So the target is 4% and it should not go beyond plus or minus 2%, which means 2% to 6% is a range within which the inflation should remain. Okay, so that is a main thing that RBI has to focus on, right? And secondarily, RBI focuses on financial stability and growth also. Okay, that is the secondary, we can say, mandate of RBI, and the primary mandate of Government of India. Government of India has a secondary mandate of price stability. I hope it is clear that RBI has the primary mandate. Primary task that RBI should do is price stability or control the inflation within the range of 2 to 6% CPI combined growth rate. Now, financial stability or growth is actually the GDP growth is actually the mandate of Government of India. So I hope the difference is understood. And here, if we see, there are various. It takes care of the monetary. It is also called the monetary authority. Why so? Because how will it ensure that inflation is actually within the limit? So it will take care that the money supply within the economy is within the limit. Okay, is as per required to maintain this inflation within the range. Okay, so since it takes care of the money supply, it is also called the monetary authority. So it is a central bank, reserve bank or monetary authority which manages the currency, the money supply. Also, it prints the currency. Okay, it has replaced the entities which were previously printing currency notes in India. If you see the currency note, you will see the signatures of the whom RBI governor, isn't it? It is the monetary policy, something through which it maintains this inflation within the particular range. Okay, monetary. It is called the monetary policy, wherein the interest rates like repo rate, etc., are varied, right? It also oversees the country's commercial banking system, isn't it? And we have examples of other countries like Federal Reserve. Federal Reserve is the central bank of which country? Can you tell me in the comment section? Okay, whoever knows the answer, please let me know in the comment section. There's this Bank of England, right? Bank of England, obviously it is the Bank of England. Nepal Rashtra Bank. Okay, so these are other examples. I hope things are clear. Moving ahead, which of the following institution is the regulator of the capital market? Very easy, RBI Grade B Phase 2 2021 question. Tell me what is the answer. Pause the video and please let me know what will be the answer for this. Yes. So if you have answered A, SEBI, that is absolutely the right answer. Obviously, we have discussed this previously. Okay, now I think this should be clear to you. Now, please answer this question. In case of a public issue of an infrastructure investment, InvIT, dash of the units are reserved for the qualified institutional buyers and for retail investors. Okay, so if we talk about InvITs, right? In what are InvITs? For that sake, first of all, if I just tell you, in like if you want to invest, let's say, in the construction of a metro rail track and all of that, so will you be able to invest directly? No, we need a whole lot of money. But there is an indirect way in which you can invest there. How is that? It is through a trust. Okay, a trust is established. What does a trust do? It will just collect money from a whole lot of people. Okay, like mutual funds do. They collect money from a whole lot of people. And this money which is collected, small amounts, they are actually invested into where? These are invested into the infrastructure projects. Okay, yes, these infrastructure projects must not be at the very beginning level, but they should be almost most of them must be like 80% of the projects must be at the completed level, so that from these infrastructure projects, if you have invested into this trust has invested into these infrastructure projects, from these projects what will happen, some revenue will be generated, and that revenue through the toll, through the fees and various other charges, the revenue which is generated, that is passed on to the trust, and that trust will actually pass on the part of the revenue distributed amongst the investors. Okay, so that is how this particular InvIT works. This trust is nothing but the it is called the InvIT, infrastructure investment trust. Okay, InvIT. So this InvIT actually has some sponsor who will be beginning this business, then there will be a trustee who will take care that this trust money is coming in the right manner, going in the right manner, is utilized in the right manner, and also there will be an investment manager who will take care where it should be invested, and there will be a project manager who with each of these infrastructure projects, he takes care that the each project is going towards completion and the revenues coming in a streamlined manner from that or not, right? All of these things. So this is how, what is the structure of a InvIT. Now that you know that in InvIT these investments can be done. Now each investor actually holds a unit of the InvIT. Okay, he can hold more as per the rules and regulations, but he holds a unit of the InvIT. He's not paying for the entire infrastructure projects himself, but a part of it, and the minimum investment that an investor can do is 1 lakh rupees. Okay, so that's a small amount you can invest, and then you invest in the infrastructure project, so you'll be getting good returns. Okay, that is the thing. So here the question is, dash of the units are reserved for qualified institutional buyers and dash for the retail investors. So the percentage of these units, some of them are reserved for the qualified institutional buyers. Now who are these? These are specific entities who are designated by SEBI, so that these entities are considered safe, like let's say public sector banks, good mutual fund companies. Okay, so these are, some of them are designated by SEBI as qualified institutional buyers, and these qualified institutional buyers are considered to be safe, right? So most of the InvIT units are reserved to be allotted to these QIBs, and some of them for the retail investors like you and me. So what is the percentage that is allotted to them as per 2025? This question came. So the correct answer over here is 75% for the qualified institutional buyers and 10% for the retail investors. Okay. And here if you see, we have remaining 15% that would be allocated to the non-institutional investors. Who are these? These are those entities who are called the high net worth individuals. Okay, so to them this thing is allotted. So you can see you are allotting most of the units to the safest entities who are qualified institutional buyers, right? And then to the non-institutional investors who have the capacity to return money, and then least to the retail investors 10%. I hope that is very clear. So C is actually the right answer here. Okay, talking about rates, we have seen that these are like trust, and they invest in commercial building, malls, warehouse and infrastructure related real estate. Okay, rate is real estate investment trust. Just like InvIT, the investment will be going into real estate properties. Okay, not in the infrastructure projects, but in real estate properties. Same thing. And here the rules, SEBI rate regulations 2014, as per that the activities are done. While these rates actually allow small investors to invest in these large scale real estate projects, the investor will be paying or investing as part of the rate. It will be invested in the commercial property. Rental income will be coming from that, and whatever income comes, 90% of that part has to be distributed amongst the investors, and 10% is something that the sponsor and other entities can keep with themselves. Similarly, we have the InvIT, infrastructure investment fund, where the money is invested in highways, power transmission projects, renewable energy, gas pipeline projects, telecom towers, as well as airports. Okay, so the SEBI InvIT regulations of 2014 as something as per this thing happens. Also the same structure here, investor invests in the InvIT infrastructure asset, that money is invested in, and then revenue, the income generated, 90% of that will be distributed. Okay, so that is the thing. Embassy office parks rate was India's first rate in 2019, right? And India's first retail or mall focused rate was Nexus Select Trust. Okay, so you know the Nexus Mall. I hope that is also part of a rate. Okay, and IRB InvIT fund, this was is an Indian infrastructure trust focused on the toll road assets. It is as notable to be the first listed InvIT in India, IRB InvIT fund. 90% of all of the money that comes from these InvITs and rates, the income that comes from the properties or the infrastructure project should be distributed back, and 80% of the money, okay, whatever you are investing, it should not be in very projects which are just starting or foundation has been laid just now. You will not get any income out of them, isn't it? So 80% of the money should go in completed and rent generating real estate or infrastructure projects, not just like that. Now coming to the next question, the National Bank for Financing Infrastructure and Development Bill 2021 was introduced in Lok Sabha on March 22, 2021. The bill seeks to establish National Bank for Financing Infrastructure and Development as a principal development financial institution for dash sector, RBI Grade B Phase 2 2023. Okay, so this is the question. Here are your options, and please pause the video and try to answer this question yourself. It is very easy. Please try to answer it. Okay. Yes, if you have answered B, infrastructure, that is absolutely the right answer. Okay, so this NAPFID was established with respect to the infrastructure sector. Now let us have a look at the topic. Okay, NAPFID, the full form you have already seen. It has been established as a development financial institution. What does that mean? Generally, what do banks do? Pure banking is something wherein banks would be giving short-term loans because they're afraid of giving long-term loans, because whatever deposits they have taken, most of them are short term and they have to pay back on those deposits. If they give long term loan, their money will be blocked and they will not be able to pay back. So that is why they do not indulge mostly in giving long term loans, and that hinders the capacity of the banks to put their money or divert the finances towards the infrastructure projects. Okay, because infrastructure projects are long term and you might not get the proper returns. The project might be stopped in between because of various protests, compliance issues, etc. Okay, so those are the issues. So generally banks do not invest in the long term infrastructure projects. So specialized institutions called development financial institutions are established, which have the mandate of investing in such kind of institutions. Okay, so large infrastructure projects is something that this NAPFID is also mandated to invest in, and this is because banks cannot efficiently fund very long-term infrastructure projects, and that is why we need development financial institutions like NAPFID. Okay, it was established in 2021 as per the 2021 Act. Headquarters are in Mumbai and totally owned by Government of India. It is supervised and regulated by RBI because it is a all India financial institution. Section 45L, it is regulated, supervised as per the Section 45N of the RBI Act respectively. Okay, so current chairman is KV Kamath and managing director is Raj Kiran Rai Ji. Okay, now moving ahead, if we talk about this particular question, it was asked in 2023 again. So, to address the need for long-term capital provider with a comprehensive cross-sectoral mandate, unlike the niche-focused mandates for other development financial institutions. So, we have many development financial institutions like NABARD might invest in the infrastructure of agriculture and rural development only. Okay, not across the board. Okay, so NAPFID has been established so as to invest across the board. Was established an infrastructure focused DFI. Okay, what is it? It has been established as a All India financial institution. The status was gained on 8th March 2022 as the fifth All India financial institution in India. Okay, so obviously we know we had four All India financial institutions which I have already discussed, and the last one recently established in 2022, it has gained this All India Financial Institution tag, and that is which particular organization? You have to tell me. It pursues both financial and development objectives. Financial objective is to lend or invest directly, indirectly in infrastructure projects and to catalyze investment from private sector. Okay, directly, indirectly, it will invest and also bring money from the private sector and invest it in the infrastructure projects. Also, institutional investors. You know, this organization also borrows money from international organizations, multilateral, bilateral organizations, okay, which where India is actually a party. And its development objective is to coordinate with the central and state governments Okay, the regulators, financial institutional investors, recent stakeholders to strengthen the infrastructure financing ecosystem, obviously. So again, this is a recreated passage, right? Not exact thing came in the exam, but yeah, we have recreated it. But yeah, similar thing came in the exam. Which of the following organization is referred to in the above paragraph? Okay, just pause the video for a few minutes, few seconds, I would say, because the answer is very easy, and let me know the answer. Yes, if you have answered C, that is absolutely the right answer. National Bank for Financing Infrastructure and Development, NAPFID. Okay, that's absolutely the right answer. Yes. Coming to the next one, the organization mentioned in the above paragraph is regulated by which of the following authorities? Tell me. Okay, now we know the answer for this, Ra. Yes, absolutely. It is All India Financial Institution. So it will be regulated by whom? RBI. So C is absolutely the right answer for this. Now, moving to the next chapter, chapter 11, financial inclusion. Those were the things with respect to financial uh, institutions, which were the important things that were asked in the exam. The financial inclusion, right? This particular chapter talks about inclusion of the most of the people into the financial system, okay, and specifically providing all of those we can say benefits to the poor and underserved sections of the society who might not have the access to, they are eligible for those things, like let's say government of India comes up with an initiative wherein it is providing universal basic income to all of those people who are falling below a particular level of annual income. Many people might be eligible for this, but they might not be receiving the benefit of it just because they are not part of the financial system. So that should not happen. So providing access by making them part of the financial system. How? At least many people might not have their bank account also open. So open their bank account. That is one thing that can be done, isn't it? So that is the thing. So here the question says which of the following does not come under the financial services for financial inclusion. Okay, RBI Grade B Phase to 2017 question. So here the options are savings account, subsidies, microcredit, insurance, financial advice. Okay, so which of these are actually not part of the services that are provided as part of the financial inclusion? Okay, please try to answer as per whatever we have discussed. Yes, so if you have answered B, subsidies, that is absolutely right. The main aim of subsidies is not to include, financial inclusion is not the aim, but to help, let's say, farmers so that their prices in the market can be reduced and they themselves are also, farmers are also getting the help. Okay, both the things. So that is the main aim. But if you see opening a savings account, providing small amount of loans, that is microcredit, providing insurance, and providing financial advice that you can do this, so that you will be eligible for the scheme. So that is what is the part of the financial inclusion. Financial advice brings financial what? Literacy, isn't it? So these are the part of the financial inclusion for sure, but not subsidies as such. So B is absolutely the right answer here. Talking about financial inclusion, it is wherein the access at reasonable cost is provided for all the households to a full range of formal financial services like savings, deposit services, payment and transfer, credit, insurance, etc. Okay, what are the different facilities that are identified under financial inclusion by the government of India? The payment and remittance services. Let's say many people have their relatives going to different countries to work, like in Singapore many people are there, many have gone to the Middle Eastern countries. Okay, so they want to send money back to their uh, family members, relatives in India. Okay, so that thing is called the remittance, and other thing might be payment within the country. Okay, so if you are unable to do these basic activities, you are not part of the financial system, and that is not financial, that is a sort of a financial exclusion of these people. Okay, so they should be included so as to avail these services and do these activities. Savings products and accounts, wherein savings bank account, current account, etc., if needed, are open credit facility providing loans. Entrepreneurial credit, whoever needs loans so as to do some business which they are really interested to do, and they are having the idea with respect to that. Loans and insurance. Then mortgage, wherein if they have some property, they can keep that as collateral and take some loan. Financial advice with respect to what I said, like you can be part of some scheme but do this and that. That is something that is that are the main facilities as per the financial inclusion financial inclusion. Okay, this is not something that I सुरेंद्र सर आप खुद ही कुछ बोल दे रहे हो नहीं. This is as per the report of the Committee on Financial Inclusion chaired by C Rangarajan ji. Okay, so 2008 का committee था ये, and based upon their report and recommendation we have come up with these things for you. Okay, now moving ahead, which of the following type of bank acts as a Government of India agent for financial inclusion in rural areas? Very simple question. Okay, so you have to pick a type of a bank over here. What are the options? Let me tell you. BC. What is this? These are the bank mitras. Okay, or also called the banking correspondents, right? Then we have private banks, then public sector banks, regional rural banks, financial advice. Okay, so which of these is a type of a bank which acts as an agent of financial inclusion which is in rural areas? So RBI Grade B Phase 2 2019 question this is. So I would want you all to just try answering this question. Okay, before we move into the discussion, please try answering this question. Okay, and let me know what would be your answer. Yes, if you have paused the video and tried answering and you have said that D, sir, regional rural banks are the is the answer to this question, you're absolutely right. Okay, so these are the banks which are specifically designed so as to serve the people, customers in the rural areas, providing rural credit, right? They're established in rural areas as such, and yeah, their mandate is to provide rural credit, and so they are the agents whose provide financial inclusion related to facilities in the rural areas. Okay, also private public sector banks also have their branches established in some of the rural areas, but not as much as the mandate is with regional rural banks. So the most appropriate answer over here is regional rural bank. Banking correspondents are those entities who actually help in providing financial services, right? Like a bank, let's say SBI has designated some local person as a banking correspondent. So SBI will be giving a few things to this person, like a mobile phone with which he can provide various financial banking services to them. Might be a POS also will be given. Okay, point of sale device on which he can take payments or give withdrawals. Okay, all of these things can be done and various transactions can be done through that POS. These basic banking services that particular banking correspondent will be providing to the rural people. Instead of just establishing a bank for that sake, just appoint a person, local person, or it can be some entity, some group of people also, and they will be providing those services, basic services, banking services to them. Open a bank account for that sake of the people, rural people, right? So that is what is a banking correspondent or bank mitra actually does. Okay, so D is absolutely the right answer. Now moving ahead, which of the following acts as an agent of microfinance institutions? Okay, this is also RBI Grade B Phase 2 2019 question. So microfinance institutions, if we talk about them, the name itself says here finance is being provided which is micro in nature. Micro in the sense small loans are provided. Okay, not just loans for that sake, small insurance policies are also opened. Not just that, small pension facilities, right? All the financial services are provided, not just limited to these, etc. are provided. The financial services whose size is small. For example, somebody needs a loan of 10,000 rupees. Will a bank give? Might be or might not, but microfinancial institutions will definitely do that. Okay, so that is a microfinancial institutions. Okay, so which kind of agents, which are the following acts as agent of microfinancial institution is being asked over here, right? So insurance companies, NBFCs, non-banking financial companies, self-help groups, regional rural banks, or none of the above. Okay, so of course there are entities like banks etc. who will be providing these microfinance institution, but there is some setup through which the people in rural areas, underserved regions actually get the facilities of the microfinance. Okay, so one such setup is a self-help group, right? What is a self-help group? This is a group of mostly women, right? 10 to 20 women, and in hilly areas it is around 5 to 10 women. they will come together and they will have this basic habit of savings. Okay, why they come together? Because all of them have the habit of savings and they want to save some money. Let's say each of them save 100 rupees per month, and there are, let's say, 10 people, so a total of 1000 rupees is saved by all of them together. So what they can do, they can do two things. First is save that money, and at the end of the month lend it to someone, and then they will return. And also they can go for doing some business out of it, isn't it? So these are the two things because of which they would be saving this. Now what NABARD has done is, for the first time, linked the self-help group with the bank. Okay, now what bank is going to do, based upon how much, first thing is that they are saving. Might be this money is there with one person and that person runs away, does something. So making things safe, this money is kept in the bank. So first linkage, to link the SHG with the bank, the main aim or the benefit is that, firstly, the money is being saved. Second benefit is that bank provides loan on the money that is saved in this particular bank of that particular SHG. So not just for the business you are utilizing 1000, let's say. So the bank says, okay, I'll give you 3000 rupees more loan because you have saved 1000. So 4000 rupees will be utilized for the business. They do the business, and then whatever returns come out of them, they'll repay the bank loan and also use some of the profit for their own self. Okay, so that is why here what should be the answer? Please pause the video and tell me. Yes, if you have answered self-help group C, that is absolutely the right answer. I hope you have understood the structure of the SHJ. Let us discuss a few other things in this regard. Talking about microfinance, okay, for the financial services, small value loans to households, small business, and entrepreneurs who lack access to the formal financial banking services is something that is microfinance. RBI defines this microfinance, the beneficiaries of microfinance facilities to be those households. Okay, the household is a husband, wife, and their dependent children. Okay, so household having an annual income which is up to rupees 3 lakhs, 3 lakhs or less than that income, if any of the households have, they are said to be part of the microfinance structure. They can avail the microfinance loans. What are the components of them? Micro credit, small amount of loan, saving facilities, small amount you can save in the bank, insurance, payment service that you payment services, payment like UPI and all can be utilized, and then there are support services other than that. Talking about SHG is one business model in the microfinance, and there's a Panchasutra for the success of SHG. The structure we have already discussed. If this kind of a group has regular meetings, there are regular savings, internal lending is happening within the group itself, timely repayment is being done, and proper accounting of everything, all the transactions that are being done. If all of these are being done, then that will be a very strong self-help group. Okay, so that is the Panchasutra of SHG success that we have discussed over here. Right, now talking about the next question, you can see over here, Indian government is committed to providing financial inclusiveness, support to marginalized and third to socio-economically neglected classes. Of course, yes, financial inclusion is a national priority of government and for inclusive growth. Important as it provides an avenue to poor to bring their savings into the formal financial system they can bring, which I have already explained to you. An avenue to remit money wherein they can send money very easily. Okay, through the formal system to their families in villages besides them out of the clutches of the usurious money lenders. They can be money lenders who put these people into debt traps many a time, so they can escape that. In the same regard, one such scheme, Dash scheme, to promote financial inclusion was launched by the government on 15th August 2014, which is one of the biggest financial inclusion initiatives in the world. Okay, so which is this scheme? Let's see, moving forward, in order to move towards creating a universal social security for all Indians, especially the poor and underprivileged, three ambitious Jan Suraksha schemes, social security schemes pertaining to insurance and pension sector were announced. Okay, by the government in the budget for 2015-16. The schemes were launched on 9th May 2015 for providing life and accident insurance, social security at an affordable rate. What are the schemes? Pradhan Mantri Suraksha Bima Yojana, Pradhan Mantri Jeevan Jyoti Bima Yojana, and Atal Pension Yojana. Okay, so if we see over here, This is the biggest financial inclusion scheme initiative that is being said over here, that is X. So read the above paragraph, identify X scheme launched by the government on 15th August 2014. Okay, so there are various schemes, but one scheme is something which actually surpasses every other scheme in India so as to include the for financial inclusion. Okay, that is the Pradhan Mantri Jan Dhan Yojana. Okay, so Pradhan Mantri Jan Dhan Yojana actually focuses on mainly opening bank accounts to every person possible who does not have a bank account right now, and also link these people to the Jam Trinity. Okay, what is the Jam Trinity? I hope you have an idea. You have opened an account. Okay, which sort account तो normally भी open कर सकते हैं. Which kind of an account? This is a no frills or a zero balance account. Okay, you do not need to maintain any balance there, right? No minimum balance required. Generally accounts have some minimum balance to be maintained, like if you have a your office has opened your salary account, then minimum balance would be 10,000 like that, and then normal accounts have 1,000 or 2,500 like that, depending differently. So here zero balance account, there is no minimum balance that you have to maintain. Okay, so if the balance falls below the minimum balance in other accounts, then charges are deducted. Okay, so here not required of such a thing. Zero balance account. So in such case, this zero balance accounts are opened, which are called Jandhan accounts, and then we have the Aadhaar card. They are linked to the Aadhaar card, and through mobile these accounts can be accessed. So that is a Jam Trinity through which they are being connected. So please try to answer this question. Pause the video and try to answer it. Yes, if you have answered B, then you are absolutely right. Pradhan Mantri Jan Dhan Yojana. Okay, so, Pradhan Mantri Jan Dhan Yojana came up in 2014. No minimum balance accounts are opened, and also 2 lakh rupees accidental insurance with 10,000 rupees overdraft facilities are also provided. Okay, so that is the thing. Now, talking about Atal Pension Yojana that is mentioned in the particular slide, this is a pension yojana wherein you will be saving some money while you are working, and during the age of 18 to 40, people can be part of this Atal Pension Yojana. And 2015, this yojana started, and the pension amount that you might be getting based upon how much you have saved, lump sum amount you have saved, would be between 1,000 and 5,000 rupees. Okay, so these are the basic initiatives that we were talking about. Also talking about the other two initiatives, that is the Pradhan Mantri Jeevan Jyoti Bima Yojana and Pradhan Mantri Suraksha Bima Yojana. So what is the main aim of these schemes? If we just see, Pradhan Mantri Jeevan Jyoti Bima Yojana is a life insurance policy. Okay, life insurance policy is opened over here. Suraksha Bima Yojana is actually a accidental insurance. Okay, so let's say there is a bread earning person of the family who meets an accident while working or during the job. So in such a case, he might not be able to work further. So in that case, what will happen to the family? So insurance policy provides some money to them. Here the amount, maximum amount, if this bread earner or the person on whom this insurance policy has been opened, if that person loses life, so in that case rupees 2 lakh is given to the family, okay, or the spouse. So that is the amount for which this particular Pradhan Mantri Jeevan Jyoti Bima Yojana is open. Now here we have two kinds. First is the, if due to accident there is a partial disability, like one hand, one leg, or just one eye is lost, so in that case 1 lakh rupees is given. And if there is complete disability, okay, so in that case 2 lakh, like person due to the accident slowly, if unfortunately the person dies, or both the legs are lost, both the hands or both the eyes are lost, so in that case 2 lakh rupees will be given. Okay, so Jeevan Jyoti Bima Yojana actually provides insurance in any case, like the death happens due to anything, then this the benefit of this yojana can be given. Here there are specific conditions, like if somebody died due to suicide, alcohol consumption, or something like that, in those cases this money will not be given. Okay, so these are some of the things with respect to these policies. Now moving ahead, what is the insurance limit under Pradhan Mantri Jeevan Jyoti Bima Yojana? RBI Grade B Phase 2023 question. Please try to answer. Okay, we have already seen the answer for this. Pause the video and tell me the answer. Yes. So if you have marked C, 2 lakh rupees, that is absolutely the right answer. Already we have discussed this. Now coming to this, with regards to the above mentioned paragraph, what is the age limit to join Pradhan Mantri Jeevan Jyoti Bima Yojana? Okay, what is the total age limit is being asked. Pradhan Mantri Jeevan Jyoti Bima Yojana and Pradhan Mantri Suraksha Bima Yojana, you should know the age limit. The starting age is 18 years for both of them, right? Jeevan Jyoti Bima Yojana, but this ends by 50 years. Okay, so the age limit is still 50 years, right? And yeah, you will all tell me what is the age limit for Pradhan Mantri Suraksha Bima Yojana. The maximum age as far as this particular Suraksha Bima Yojana is. Please let me know in the comment section. Okay, please try. So it is actually 70 years. Okay, so please see that. And this Jeevan Jyoti Bima Yojana terminates by the time the person has reached an age of 55 years. Okay. With regard to the above mentioned paragraph, what is the maximum pension received as per the Pradhan Mantri Atal Pension Yojana? Already I have told you, so please pause the video and tell me the answer. Yes, if you have answered A 5000, that is absolutely the right answer. Wonderful. With regard to this paragraph, what is the premium paid as per the Pradhan Mantri Suraksha Bima Yojana? Okay, what is the premium paid as per this particular Yojana? Annually, some premium is to be paid by that person. So, what is that? So it is 10 rupees only annually to be paid. While talking about the other Pradhan Mantri Jeevan Jyoti Bima Yojana, it is around 420 something. Okay, that has to be paid. Now coming to the next question, what does this JAM Trinity stand for? This is also something that I have already explained to you. So RBI Grade B Phase 2025 question. Please let me know the answer to this. Yes, if you have answered Jandhan Aadhaar Mobile AS, absolutely the right answer. I have already explained this thing to you, right? So moving ahead. Now talking about the next chapter, chapter 12, developments in the digital payment system. Okay, so what are the questions that were asked over here? The first question is in front of your screen. Try to answer it. Consider the following statements about UPI. Which of these are correct is being asked. True statements are to be picked. Okay, phase 2 2017 question. Now UPI is regulated by NPCI, it is regulated by UIDAI, which is the right one. Need bank details of the receiver of the payment while transferring the amount. Okay, and one needs virtual details, okay, detailed address of the receiver of the payment while transferring this particular amount. I'm talking about UPI, we have to pick the two correct statements over here. Obviously you can see there are only two statements which are correct. Now talking about UPI, right? We know Unified Payments Interface. So here UPI is something through which you can transfer money. This is an initiative of whom? Do you have an idea? Yes, it is NPCI. Okay, NPCI regulates and manages this initiative, National Payments Corporation of India, and through UPI you can make online payments, isn't it? And you may not be needing detailed address of the other person, and having just a few details like even the phone number or just the UPI ID, that would be enough so as to transfer this particular money, isn't it? So talking about the correct statements over here, if we see, would be this 1 and 4. Okay, virtual address only is needed, right? Which is the UPI ID, or if you just have the phone number, that is enough. You don't need any bank details, or it is not regulated by UIDAI. Taking the basics, I hope this question is answered very properly. Let us have a look at the UPI. Okay, first talking about the digital revolution of the payment modes that has happened post 2010. So prior to 2010 there were only few payment systems that we had, like RTGS, NEFT, ECS. Okay, you must be knowing about the real time gross settlement. Then we have the National Electronic Funds Transfer System. Okay, similarly ECS and various other cards, right? So those were there prior to 2010, but after 2010 we have a proliferation of the different types of payment mechanisms. Like you can see over here, NPCI came up. So all of these blue ones are actually totally managed, regulated by the RBI. In fact, NEFT and RTGS are known to be part of the centralized payment system, which is totally established, managed, regulated everything by the RBI directly, while NPCI takes care of the rest of them like BHIM, RuPay, BBPS, AEPS, UPI, IMPS, NETC, USSD, NACH, e-Rupee, Bharat QR code and all. Okay. And talking about others like PPIs, cards, these are under the jurisdiction of RBI, right? Now, 2010 IMPS was brought in, right? Immediate payment systems. That was brought in by NPCI, wherein quick transfers like NEFT and RTGS take time. Slight NEFT is slower, RTGS is slightly faster, but still takes time. So IMPS is immediate payment, okay, quick. RuPay cards through which you can withdraw money, right? USSD online, through the mobile and all the payment can be done. Then Aadhaar enabled payment system, UPI by NPCI, BHIM for again online payments, BBPS for Bharat Bill Payment System, which is you can pay the bills whichever you want in a bulk manner, like say on date 15th of every month you want to pay a whole lot of bills, you can just give a standing instruction previously and then through BBPS you can make that payment. NETC is the toll gate fast tag. Okay, we'll be talking about that also. NECH is the wherein you can go for large amount bulk payments at once and you can automate, national automated system. Okay, then Bharat QR came in by NPCI in 2017, all of these in 16. Then in 19, we came up with the National Common Mobility Card, which is nothing but the common card so as to travel in all the metros mostly over across India. UPI Auto Pay came in 2020, e-Rupee in 2021, UPI 123, UPI Lite, and Central Bank Digital Currency Pilot Edition came in 2022. Okay, we'll talk about some of these, specifically mainly the UPI. How it works, you have to download an app from the App Store, install it on the phone, set app login, then create virtual address. Okay, we'll have your own virtual address, right? Then add your bank address over here, create an MPIN, and then start transacting using the UPI. What are the advantages of UPI? Real-time settlement of funds happens and no need to remember or share any account details to anyone. You can just share the virtual ID and you can even add multiple bank accounts over here and do the transactions. Not just that, nowadays UPI provides a whole lot of things, right? Virtual address would be like aram at the rate SBI or your phone number at the rate Paytm or something like that. Okay, so that UPI ID is something that is the virtual address. You know a whole lot about this more than me telling you, but yeah, I hope this is clear. Now there is what are the, like the advantages if we see, there's no need of account number of IFSC code being shared. There's no need of adding anyone as a beneficiary or payee, which we needed for the online banking system. Debit cards are not required. It is safe. Sender and receiver can anyone can initiate this transaction. Okay, and how to send the money is like you choose to send, enter the pay's virtual address, enter that amount, write remarks, confirm the details, and hit send, and the money will be sent. You know it better, right? That is how UPI works. Now talking about other modern initiatives like UPI Auto Pay is like you give a standing instruction and then through UPI the auto debit mandate is given and your money will be auto debited at a particular date every month or whatever frequency you fix that thing to be. Okay, you have to give one time approval to the particular merchants to auto, they themselves will be taking money from your particular account. The UPI started to be used even more widely because large number of Indians, like they have to pay EMI, stock SIPs, mutual fund investments, etc. Automatically up to 15,000 is something that you can recurring transactions if you are doing. Users can allow this thing and give the standing instruction for that in the UPI apps, while 1 lakh via authorization on the due date. Okay, on a particular due date you can authorize. uh, Auto debit is something 15,000 you can fix and you don't even need to authorize. That will be cut directly from your account once you have given the confirmation. But let's say you have given a due date and you want to pay till 1 lakh rupees. Then on that due date, you will have to authorize. Okay, today this amount is to be cut. You will authorize, then that amount will be cut. Okay, so it is like a reminder and then asking you that amount will be cut. I hope that is clear. I'm talking about UPI Lite. Here, what happens? This is mainly for the low value transactions. Light in the sense shorter version, isn't it? So without any active internet connection, you can do these payments. Here you do not need to go for 4 or 6 digit pin. You do not need to remember, right? Maximum balance, you can maintain some balance in the wallet and then make the payment. Okay, maximum balance that you can maintain is 5,000 at any given time in this particular wallet, and one time transaction, the limit is 1,000 rupees. Okay, coming to other one, UPI 123 pay, which is like you can pay through your feature phone also. Predefined number would be there. You have to dial that, give a missed call on that number, and then the payment will be done automatically based upon other details that are being asked. This can also be OEM enabled payments, like original equipment manufacturers like Samsung itself provides this payment app into its feature phone, Samsung Pay, and then through that you can go for payment like that. And also there are different sounds that are provided over here, like anyone who is even visually impaired, those people can also use this UPI 123 very easily. Okay, the daily limit is 10,000 rupees. Now moving to UPI circle. Okay, so let us say there is this business owner. He has a whole lot of tasks to do, and one important task that he has to do is almost during the entire day, let's say he has to confirm so many payments. Okay, so as part of his business, he has to pay for a whole lot of things. So whole day, instead of he himself confirming the payments, if there was anything, any other mechanism through which these payments would be confirmed, that would be better thing, isn't it? He's involved in a whole lot of thing, thinking a whole lot about the growth of the company and all. How will he sit and give time to these payments? So what he does, he creates a UPI circle, wherein let's say the HR of the particular company is also involved. Who are these people? Apart from the main account is of this business owner, who is the primary user of this account, the transactions from that account can be approved by the other secondary users also. Okay, so that authorization will be given by the primary user, and this task of actually making the payments will be delegated. This is within a limit. Of course, the secondary user might misuse this thing and withdraw a whole lot of amount. So there's a limit set, right? Also, there can be up to 5 secondary users who can actually access this particular account. That is the maximum, not more than that. Here, full delegation can also be done. Like you're totally authorized yourself to make the payment, all the secondary users, or partial delegation, wherein the secondary user will initiate the payment and the confirmation authorization will be done. Final authorization will be done by the primary user himself, and then only the payment will be done. Clear? So that too within a limit, obviously. So that is the thing. Finances for family, business owners, students, it is very good, right? So now coming to this question, UPI is monitored by which of the following institution? Tell me the answer. 2018 RBI Grade B Phase 2 question. Tell me what will be the answer. Pause the video and try to answer. Yes, if you have answered National Payment Corporation NPCI of India, that is absolutely the right answer, isn't it? Moving to the next question. Name of the organization formed in 2008 and responsible for creating a robust payment and settlement infrastructure in the country. 2021 phase 2 question. Okay. Which organization has actually established this? Pause the video and answer. Yes, absolutely. If you have answered A, NPCI, that is absolutely the right answer. It is not. CCIL is for clearing and settlement of the transactions. Paytm itself is a prepaid payment related app. BBPS, we have seen Bharat Bill Payments if you want to pay bulk bills. Okay, so you can go for this BBPS. So the correct answer is NPCI, not the others. Now, talking about this particular paragraph, Dash has developed the Dash program to meet the electronic tolling requirements of the Indian market. It offers an interoperable nationwide toll payment solution. Tolls are paid. I already told you, gave you the answer to this. You should be able to answer this. Including clearinghouse services are also provided for settlement dispute management. Interoperability as it applies to Dash system encompasses a common set of processes, business rules, and technical specifications which enable a customer to use their Dash accounts as payment mode, okay, on any of the toll plazas. Okay, as you move between states and regions, you have to pay the tolls. Okay, so this particular organization came up with a particular initiative or payment system through which these tolls can be seamlessly paid. Okay, you need not, because previously there was this issue, wait for change. If the change is not there, the queue is increasing backside, fights, disputes. Okay, all of those are eliminated with this particular system. What is that? The paragraph is talking about dash system and dash account. Very easily here the question is being asked in 2021. Okay, so if you know, NPCI actually came up with this payment system, National E-Toll Collection, NETC, isn't it? This is the system, and through this we have the fast tag thing, right? Uh, Wherein through the you do not have to actually go for any transaction or something. RFID through that particular method, a particular sort of a QR or there will be one sticker that you will stick on your vehicle, and that will be scanned, and automatically the amount will be cut. Okay, whatever amount is there in your wallet, that amount will be cut from that, whatever amount is required, and then the payment is made, isn't it? So this is a system for quickness of the payments at the toll plaza, so that the traffic does not stop there, right? So now please try to answer it. Pause the video and try to answer. Yes, if you have answered B, NETC and the FASTag account, that is absolutely the right answer. Clear? So this increases convenience, centralization, interoperable toll collection system, isn't it? If you have so many vehicles waiting over here and there's a dispute going on over here, right, with respect to chain, chiller nahi, ye nahi, online transaction nahi ho raha, right, all of these things. So that will be a big issue, isn't it? So, so as to avoid that, we have NPCI came up with this National Electronic Toll Collection NETC system to solve this problem. It is interoperable in the sense you can operate it anywhere within India. Any toll plaza it can be operated, right? Wherein through the FASTag account, you can save some money in the FASTag account wallet, and whatever amount is required at the particular toll plaza, 100, 120, 150, that will be cut automatically through RFID. Okay, you do not have to scan anything, nothing. If you there's a sticker on your vehicle, you must be knowing it if you have traveled, so that will be scanned and immediately the money will be debited, okay, out of your account. It will be moving into their account. Who introduced the NETC system to meet the electronic tolling requirements of the Indian market? Okay, what is the answer for this? Please pause the video and tell me. Yes, NPCI is absolutely the right answer. Not RBI, SEBI or regulators. SIDBI is the All India Financial Institution. SBI is actually a bank. Obviously, we know. So NPCI has come up with this particular system. So B is the right answer. Now this one we have PIDF. Okay, system, Payment Infrastructure Development related. This particular scheme, financing scheme, as operationalized by RBI on 1st January 2021, subsidizes deployment of point of sale infrastructure. Okay, point of sale system should be provided to everyone, and through that the payment should be done. Physical and digital modes in Tier 3 and Tier 6 centers in northeastern states of the country, because establishing so many bank branches there is very difficult. So through this POS systems, actually different kinds of payments can be accelerated. So this particular fund, okay, Payment Infrastructure Development Fund, and this is established as part of a scheme. So this particular fund provides money to establish such kind of and provide the POS infrastructure across India, specifically in areas where providing the actual physical infrastructure of a bank branch is very difficult. Okay, in this regard, RBI envisages dash lakh new touch points every year for digital payments. Obviously, this is something that you cannot answer until and unless you have the specific yearly data with you. Right, but at least I think the PIDF scheme is clear to you that it is a payment infrastructure development fund. A fund is established, and that will help in establishing making so many POS systems, so that the facility can be provided. Basic banking facilities can be provided in far off places. Okay, so what is the target as per this particular question, 2022? As per that time, the target is being asked. So obviously, the correct answer here is 30 lakhs. PIDF was established by RBI in 2021, Payment Infrastructure Development Fund scheme. I hope the aim is clear when it was brought out and who brought out RBI. I think these three things are enough to answer the background of PIDF scheme. And if there's any new development in this, please go through the current affairs. Then talking about this, another question, in recent efforts to streamline transactions, enhance investor security, SEBI introduced new measures for public issues of debt securities. These measures require individual investors seeking to apply through intermediaries to use a specific method to block the funds. Okay, especially for smaller subscription amounts, investors will need to provide an account linked payment ID associated with a bank in their bid cum application forms. By doing so, SEBI aims to reduce dependency on traditional banking routes and encourage the adoption of faster digital options. Okay, like if you want to make the payment for, let's say, buying a share, so you will block the amount in your particular account. Instead of transferring it entirely, you will block it. You have set the deal, and once let's say you get the allotment of that shares, this blocked account amount will be transferred from your account to the company's account. If you do not get the allotment of the shares, okay, you have applied for it but you do not get the allotment, then this blocked amount will be unblocked and coming back into your account. Okay, so related to that initiative, this is being talked about. SEBI brought out this initiative. SEBI outlined that this updated process will apply to the public issues of multiple debt instruments, including redeemable preference shares, municipal bonds, securitized debt products. These changes designed to safeguard the interests of retail investors will be implemented beginning in November 2024, thus requiring intermediaries to update their application protocols. Under revised guidelines, SEBI expects more efficient fund blocking that enhances transaction speed and reduces the risk of errors or delays. Okay, SEBI's authority to make such amendments as per SEBI Act of 1992 ensuring that new protocol align with the national standards of market regulation, and investors may choose other approved methods for larger applications. Smaller transactions are expected to follow this particular pathway. Okay, so what is the maximum subscription amount under which investors are required to use designated fund blocking method? So this was brought about in November 2024 mainly. So you will have to block this particular fund. So what happens with that is it is there in your account, it is earning interest, and once previously what used to happen, this money used to be transferred immediately once you have done the deal to the company, then it goes there. Once you do not have that particular share allotted to you, the money has to be returned again. This used to take 2 days to transfer, 2 days to come back, 3 4 days, 1 week gone, and just this transfer and coming back, and you have lost your interest on that amount for 1 week, and also you have blocked that amount with other entity for 1 week. Instead, it will be blocked in your own account. If you have got the allotment, the money will be transferred, otherwise no. That is the thing. So maximum subscription amount under which investors are required to use this designated fund blocking method is what? Okay, so as per the rules, it is around 5 lakh. Okay, 5 lakh rupees maximum amount, right? Normal UPI transaction limit is 1 lakh per transaction. Through UPI, this particular thing happens for a few specific categories of transaction. UPI like capital market, collection, insurance, foreign inward remittance, the transaction limit is up to 5 lakh rupees per transaction. At least 5 lakh you have to transfer. Okay, so only then this will happen. And 10 lakh in 24 hours, total limit of 10 lakh in 24 hours. Previously it was 2 lakhs. Okay, maximum you can transfer this much as far as going for these transactions are concerned. So here through UPI normally you can transfer 1 lakh per transaction, but for purposes like capital market collection, the amounts will be higher. So the maximum limit that you can transfer is 5 lakh rupees. So that is why the answer is 5 lakh over here. And total limit during the particular day is 10 lakh. Okay, within 24 hours at least is 10 lakh rupees. Earlier which was 2 lakh. So the limits have been increased. Now, which method must be used to block the funds for certain debt security subscription as indicated by SEBI? Okay, so what is this method? Actually, it is through the UPI. Okay, the funds will be blocked, right? So, this was a question of RBI Grade B Phase 2 2024. Now, which organization has introduced this updated guidelines? So, as you can see from the question, what do you think who has introduced these guidelines? Yes, SEBI is absolutely the right answer, isn't it? How many secondary users can be delegated in the UPI Unified Payments Interface Circle? How many secondary users? Tell me. Please pause the video and tell me. We have discussed this, isn't it? Yes, absolutely. If you have answered D5, that is absolutely the right answer. Okay. Now moving to the last chapter, role of IT in banking and financial system. Here is the first question. Recently, RBI has released Sound Dash with the theme cross border payments under the dash for live testing of new products or services in a controlled test or regulatory environment. So RBI actually test new things. Like UPI was also tested through this particular thing called the regulatory sandbox. Okay, what is this term actually? Let us try to break it down and try to understand. First of all, talking about the sandbox. Okay, so in the sand, if you kick, fight, do this, that, okay, so there will be small bruises, but not too much of a, you will not be hurt so much, isn't it? But if you do it on the cement road, what is going to happen? You might have so many bruises, right? So yeah, sandbox is a place wherein certain activities can be done properly, and then there will be no hurt, isn't it? Nobody will be hurt. Similarly, a regulatory sandbox is created. Okay, so this is like there are some relaxations with respect to rules and regulations given to certain initiatives in the starting stage, so that the effect and result of that particular initiative is understood, and then later on it can be brought into the public domain in a regulated manner. Is that understood? So here what is going to happen? Live testing. You just make these things live for a few entities in a very less regulated manner. That is, you do not have to follow any certain rules and regulations, large reserve requirements. All of these compliances are put aside, so that the first of all the product is tested, and then we will bring it into the regulation if it is fine. Okay, new product services are tested in a controlled test regulatory environment, as I told you. Okay, so that is called a regulatory sandbox. Okay, so for that cohort or uh, like it is like a starting of such all of these activities with respect to that regulatory sandbox, that is called a cohort, that is brought out. So the answer to this question will be what? Yes, if you have answered A, cohort and regulatory sandbox, that is absolutely the right answer. What is a regulatory sandbox? Live testing of new products is done, as I already told you. Regulatory in the sense RBI, SEBI, IRDI rules and regulations are actually simplified, or we can say some of the rules and regulations are bypassed also, so as to test the products and then later on take it into the public domain with all full regulations. Some relaxations may be provided by the regulator, helps in collecting evidence on the benefits and risks that this product actually brings in. Systems learn from sandbox and evolve over a period of time, that what rules and regulations have to be built with respect to this particular new kind of a product. Okay, so these were the things we had to discuss in this particular session. I hope you thoroughly enjoyed the session. You have understood everything very clearly, right? And also let me tell you that if you have properly thought that I have to prepare really well for the RBI Grade B exam, then we have come up with wonderful courses for you at edutab.in. So what you can do is go over edutab.in and click on RBI Grade B courses, and you can see wonderful courses over here, right from the live crash course that we have, which is for both phase 1 and phase 2. You can be part of them and prepare really well as far as this exam is concerned. Live classes कराए जाते हैं यहाँ पर, and the most important topics are taught to you in a very structured manner. Also here you will be finding the solve previous year question, chapter wise full and tests, etc. In we also have the phase 2 live crash course, in which you can be part of the live classes with respect to the very important three papers of the phase 2. We have summary sheets, mind maps, current affair magazine, solve previous year questions, chapter wise current affairs, mock tests, and full length mock tests over here in this particular course. Also, we have the test series, like for phase 1 and phase 2, combined test series, wherein objective as well as descriptive evaluation, everything is available. While here in phase 2 test series, we have only related to three papers, and evaluation of them also will be done, right? We have wonderful discounts also, like you can see for the phase 1 and phase 2 we have a wonderful 84% discounts. You can check out the discounts on the website, and if you are like you want to go for a comprehensive preparation, right, you can go for a gold and silver courses also. Gold is comprehensive preparation with respect to phase 1 to phase 2 and interview, while silver course is for phase 2 and interview only. Okay, so you can be part of these courses, and the link for these courses are given in the description of this video. And if you have any other query, doubt, you can call us on this number or drop a mail at hello@edutab.co.in. Wishing you all the best. Thank you so much.